All right, folks, what's up? It's Eric with Option Edge, and today we're looking at at EWZ iShares MSCI Brazil ETF. So that's exactly what it is. It's a ETF for some companies in Brazil. It's comprised of different energy, materials, financial companies in Brazil. And right now, currently, there's a lot of some protests in the street with the new election of the presidents. A lot of sort of civil unrest. So this is adding some volatility to the stock. So currently, if we go over to Tasty Trade here, I'm going to show you something. Yeah, if we're in Tasty Trade, you can see that EWZ currently has a IV rank of 88. It was actually trading at a IV rank of above 90 before market close. That's gone down a little bit. But when the IV rank is high, we can sell premium and get paid more for that premium while taking on the same risk. So we're basically getting compensated more for the same risk. So that seems like a good deal to me. And another thing to think about is EWZ is a ETF. So that actually makes things a little bit better for us in terms of risk because we're not dealing with one single like equity, like for example, Amazon or Apple. We're dealing with a diversified ETF that has many different underlyings or holdings under the name. So we're not subjected to company-specific risk, okay? Let me show you. So like I said, we want to sell premium in this name. And I'm going to show you what I picked out. So I chose want to sell the 27 put and buy behind that the 24 put. 3 strikes wide. If you'd like to go up to 5 strikes wide, be my guest. If you want to go even further, be my guest. But 3 to 5 strikes wide is sort of the sweet spot for credit spreads, and I could show you why, but that's another video to show you. Basically, we're getting the most bang for our buck in terms of risk and premium, basically. So that's why you want to aim for 3 to 5 strikes wide. So I want to show you why I chose a put spread. You might ask, why not a call credit spread? Why not a iron condor? So let me show you why. Okay, so this is a new piece of software I actually just purchased called Pattern Finder by CML Viz. I've bought some of their products before. They have a good options backtesting machine, trade machine. They have a couple other products as well. So this is EWZ. We can see this 18-month chart with the daily. So each candle is a day. And what I'm noticing off the bat is we're coming into a little bit of support. Hopefully we bounce. You can see this red line here is support, above is resistance, and these not to go into things too quickly, but or too in depth. But basically, this is AI drawn charts. I can't chart for shit, so I allow the computer to sort of draw the lines and show me some important points on the chart. So you can see that right around $28, we have this pink line, which is going to show us just in a point that has been touched and hit a bunch of times, and you can see that sort of support. And then we have this rising trend line at the base here. So you can see over time that we've stayed above that rising trend line for the most part, besides here. So my hypothesis is this, that today, we went down a little bit. I think we might come down a little further, but if we do, we're going to bounce off the 28, right around 28, the 28. We're going to bounce off right around $28 and hopefully come back up and float around here. Who knows how fast or quick. So I want to sell a spread, collect premium, and make a bet that we stay above $27 based on where the stock has touched and bounced off before. So let's go back to Tasty Trade. And what's great about this, if we look at the numbers for this, you can see our probability of profit selling this December 16th, 27.24 put spread. So it's 30 days to expiry. We're getting, we have almost a 75% probability of profit. IV ranks high, like I said, $1.30 a day in theta, and the overall delta is 16. So overall, I think this is a good trade. Our max loss is 222. So you got to like that we're getting this much premium with that high of a probability of profit. And we have almost a 3 to 1 or 1 to 3 credit to risk. Uh, so I like this trade. I think it's a good trade. And yeah, that's it. You can already see we've gone from 88 to 87, so volatility's already coming down.